Good morning, everybody. This is Torian Paul. Well, more so afternoon. This is Latorian Paul, and today I want to bring another strategy, which is not another strategy, which is more so um, a build on of an easy strategy. And I think a lot of times people just need this is for the people who need confirmation. This strategy is for the people who need confirmations before they take a trade. All right, the strategy works on every time frame, but the lower the time frame, the less likely you're able to hold the trade for a long time. So the lower the time frame, the more you have to watch. The higher the time frame, the less you'll have to watch the charts. All right, so what am I talking about? Well, this strategy I'm calling the three cross strategy. The three cross strategy. And what am I talking about? Three crosses. The three cross strategy it is composed of uh, three consecutive times that moving averages are crossed. Here's a perfect example. Let's zoom in here. All right. So I'm using three moving averages and they're all exponential. The 20, the 50, and the 100. All right. The 20, the 50, and the 100. The 20 is yellow, the 50 is the red, and the 100 is the green. So when I say three consecutive moving average crosses, these are your confirmations that you need in order to place a trade, whether it be up or down. In this case, we're going to the upside. So let's look in here, put some objects around these. So you got a moving average cross right here. Got another moving average cross right after that. And then the third moving average cross is right here. After you get all these three consecutive moving average crosses, you then look for an opportunity to buy. Right now, obviously, with gold, you got to be more sensitive, but you wait until it comes back after that third moving average cross. Wait for a break and retest. You had a break. It came back to retest for that. This spot right here, and you enter the trade. You enter the trade right here for the buy, and because it's on the 15-minute chart, you enter here for the buy, and then you watch the trade and see what's going on. So in all actuality, that one trade entry gave you 2 days of rise without the moving averages coming back to cross. So you could get out at this first moving average cross, or you can get out at the next one, or if it retests the highs. Okay, you can either get out at the moving average cross, or allow the moving average cross to allow you to decide whether you'll continue to hold it, wait for whatever high was to be retested, or just to look at it. But if you want to be safe, get out at this first moving average cross. Whenever the 50 crosses the whenever the 20 crosses the 50, that'll be your exit. So how do you find your entry? You wait for three moving average consecutive moving average crosses. You want the 20 to cross the 50, you want the 20 to cross the 100, and then you want the 50 to cross the 100, and then you wait for a break and retest, enter the trade, and then you get out when the 20 crosses the 50. All right. Now, like I said, this is more or less a buildup of previous strategies, um, but it's for those people who need to see uh, consecutive uh, confluences, or just need some kind of confirmation to verify themselves. And I decided to use just the moving averages instead of using something with the TDI, because I know that the moving averages are on every trading platform. They are on MT4, MT5, TradingView, right? And it's just a less is more situation. All right. Now you will have consecutive, so you have one, two, three, right? And then you'll have a short. a short little opportunity sometimes, but it's all profit. Okay. Now, if you want to look at the time frames where you can, I will start off with the 1 hour, and you will see, just for example, right? Just for example, we had one here, second here, third here. Wait for the break and retest, which was been here. Their trade alone would have been, that's 1900 pips. Okay. And then vice versa. If you got in this trade, the one that I spoke about, and got out at the moving average cross, which would have been here, mind you, you're in a 1 hour chart. So if you got in here and got out there, that's 1600 pips. So you'd have made 1600 pips in 1, 2, 3, 4. It's about 6 days. And like I said, it works on the bigger the time frame, the longer the hold. The bigger the time frame, the longer the hold. Okay. The bigger the time frame, the longer the hold. So let's look at. So in this case, you had 1, 2, 3. The break and retest came way later. All right, now you went up 850 pips, had a slight drawdown of about 300 pips, but that 850 pips should have been enough to help. That's a lot of pips off one trade. And this is the cool thing about this trading strategy is that it allows you to get the best trade possible. You're not worrying about supply and demand, which is good. It's very good. You have something that works every time. And so let's just mark it out so we can continue to see what we're looking at. Moving average cross right there with the 20 and the 50. And then right after that, you have the moving average cross of, let me zoom in. So come on down. It was just a really quick, let me just mark them all so you can see because it happened so quick. All of these, all the crosses occurred. One here, one there, and one there. I'll put my verticals here. Yeah, moving average cross there. 20 cross the 20 cross the 100, and then the 50 cross the 100. So you had 3 consecutive moving average crosses. Then you wait for the break and retest. And so in this case, we had highs here. This should be straight across. All right, that was our break and retest for this particular high. So if you got in at this point, 695 pips off one trade. Okay, now this is what? This is the 1 week. So you'd have had to let this you would have to let this set up for some days and be impatient. But to be able to take one trade and make almost 700 pips, right? That 700 pips could have been whatever you had, whatever you were able to trade as far as lot size. 0.01, that's $70. 0.1, that's $700. 1.0, that's 7,000. You name it, right? So that is the cool thing. And then, like I said, the bigger the time frame, here's one, two, three, right? Came back here, which is still a retest of this area. So this would have been down. That's almost 980 pips. So if you don't have time to trade every day, you want to go with the bigger time frames, right? So let me zoom out again and let's go back this way because, like I said, once you see it, it's good. It's good to know. Um, and then you also have the one where they cross and sync, like this area. So let me zoom in here, go back here. You will have times where they cross like this, where the 20 crosses through the 50, and then the 50 and the 100 quickly, and then the 50 crosses the 100, and the same thing occurs. You wait for a break and retest after those 3 crosses occur, right? And so the break and retest came, you're looking at these highs. So you're looking at there. So your entry would have been about here. This would have been the entry. Let me see if I can put it object. It should have arrows, something like that. And let me see what we got. Shapes, arrows, up. You enter right there. Make this a little bigger. Mm, mm, mm. So that would have been your entry. And you literally hold in the trade until moving average cross occur. So and moving average cross didn't occur until to this spot. So if I zoom out, and these are weeks. If I zoom out from where I entered it, I held this trade for 1, 2, 3, 4, 5, 6, 7, 8. I mean, honestly, you can do the moving average cross, or you can do until you're satisfied. I would have particularly got out at these highs because that would have been approximately 9,900 pips. That's a lot of money for 2 months of holding a trade. 9,900 pips is literally on the smallest end $990 with a point one. That's 9,900 with a standard lot. That's 99,000 and so forth. So and I'm looking at the time frame. I'm not doing multiple trading. I'm not scalping. Now, if you want to scalp, all you have to do is go to a smaller time frame because let me clear these objects out real quick. There it works for the scalpers as well. So if you do say for instance you do the 15 minute, not really a scalping. It could be used as a scalping, but 15-minute kind of plays along with the day trading. Scalping is where you want to get at least 3 to 5 trades in, or your situation is safe, right? So for the scalper, you will have a lot more of these situations where they all cross together really quick, right? But so cross, break and retest, boom, 30 pips. So you still can do a good job scalping um as well. Like I said, you'll get more of the and you'll still see on the scalping where you'll see the 1, 2, 3, and then you look for the break and retest, or you can just if depending on how comfortable you are with your lot size, you could just enter the trade after that third cross. All right. So if you got it like that, you got it like that. So uh, I was watching one guy and he was saying that uh, you should always have a stash, a capital of about $1,000 and trade at $250 increments. That way you won't have to worry about having capital for uh, the rest of the week or however long you decide to trade. But yeah, if you don't have the three moving average crosses, then you shouldn't trade. If you do have the three moving average crosses, then you shouldn't doubt it. Like I said, real quick, you don't have to get these lows. You don't have to be spot on with your entry here. Just wait until the moving averages confirm where it's going. Don't trade against the moving averages. Trade with them. So you got all three crossing here. You got the break and you got a retest here. That's 100 pips. If you make $100, if you take $100, if you make $100 10 times in a week, that's $1,000. So it's not about always getting all the pips, right? It's about knocking down those little bits, right? So you got $100, your goal was just to make $100. How many ever times you can do that scalping, especially trading gold? You can scalp $100 increments, right? Now, honestly, with the with the broker that I'm using, you can trade $100 trades. I don't know. I haven't traded gold since it went crazy, but I remember when it was like around 4,500. You can trade gold. The smallest margin was like $9.87. So you could trade gold with $100. Now, I would just suggest, as I said before, waiting for those three things to happen. The moving average, with all three moving averages crosses happening, right? And then we're looking for a break and retest before using that $100 because you're not going to have much play if it goes against you. So after this, three moving averages across, had a break, had a retest. You get in here with $1. That's 60 pips. It comes back down, doesn't do much, but then it's still going up. So you made 300, $400 off that one trade. So that's $100, $100 four times. And you keep trading at the increments that way, and you stick with one lot size until you're able to increase your lot size. But when you increase your lot size, and I had to learn to do this. A lot of times accounts are blown because you try to move your lot size too soon. You focus more on trying to get more out of the lot size instead of trying to be consistent with the pips. You don't give your strategy time to work when you keep putting yourself under the unnecessary pressure of, well, I just up my lot size and now the account is drawn against me. And so I got to be more nervous because I didn't stepped out too heavy and my trade is right, but the drawdown may close me out. All right. So let's even go to the 1 minute because it works on the 1 minute time frame as well. Perfect example, CR3, they all cross, break and retest after the three cross, enter the trade, and you literally can just hold it until the moving average cross again. So this trade either to the highs or to the moving average cross again. That's 530 pips at the lowest, or it could have been, I think this was 614 pips, right? And it happens over and over again. Like if you want to scalp, use a 1 minute time frame. If you a 1 minute time frame, 5 minute time, the 1 and 5 minute time frame, if you want to scalp. But like I said, it works. This thing works. It works perfectly, right? Moving average cross there, moving average cross there, moving average cross there. You can literally enter after the trade, after the crossing, and be just fine. Just make sure that where you enter at, um, you can handle any drawdown that may occur. If the moving averages don't cross, you wait for a break and retest to continue the trade into that direction. Um, what else is there? That's really all there is. You look for the moving averages to cross consecutively, and they always will. If they don't cross consecutively, like they like either like this or like this, where you can clearly see the crossing, one, two, three, then you look for the trade in the direction. So if they're crossing and they're all heading upward, you should not be selling. If they're crossing and they're all heading downward, you should not be buying, right? You wait for the retest. Like in this case, they crossed, but you didn't get a retest until here. You had this, but this is a better retest. And then once you get the retest, you enter the trade. All right. Now you got to watch it because it can switch on you, right? But you can get that 100 pips. I for sure don't go goes been moving really sporadically. Just this move alone was 219. So you could have got the 100 pips. You could have entered a trade, put it for an 100 pip take profit, and been good. Woke up in the morning, did the same thing again, break and retest, put it in for 100. So that's 200 pips. So you'd have made $300 just trading the same lot size, focusing on focusing on pips, right? And then also, honestly, if it's going in your direction, if it's going in the direction you're trading, and you're already at 100, you got to go over there. If it's already at 100, and put that back. If it's already at 100, if it's already going in your favor, why close the trade? It's less thing. It's better to monitor than to find another opportunity to enter. Say that again. It's better to monitor a trade you're already in than to find another entry to enter into the same direction of the trade that you closed out. Okay. So if you got the break retest and you enter, you here, if there's no crossing or the moving averages, there's no reason to get out. All right. Even with the moving average cross. Continue to look. If it crosses and cross back up, you wait for a break and retest. After here, you had a break, and then the retest came here. It broke this high. Then the retest came here. Get back in. So this one trade would have put you, this one trade and then this trade would have put you at $1,000, which is great, right? You made $1,000 within two trades. Keep trading at that point. Keep trading at that. Keep trading at the lot size you're at, or if you're comfortable or you're ready to move up the ante, okay, instead of going doing a point one, do a point two, but still focus on that. Whatever, focus on either the pips or focus on the strategy. If you get in a trade, like for example, if you get in here, you either get out at the high or you get out at the moving average cross. Moving average cross here, wait for that pullback. Hold on. Here. So either you get in and you wait for the moving average to cross again, but in this case it crossed there. You wait until it comes back to get out. So that would be another 700 pips. So that those three trades took you from $100 to 1,700 in profit, and you kept the same lot size. So with that, guys, I'm gonna let you go. I'll post this to the YouTube channel, and then I'll post this to the Facebook group. But you guys have a great day.